Hello and welcome to this presentation of the Trade of the Week. Now in this week's webinar we're going to be talking about a great entry technique which we call the confirmation method. Hello and welcome once again. My name is Stephen Primo. I am the president and founder of Specialist Trading, and Specialist Trading is first and foremost an educational company where we teach all of our students and members all of the tips and techniques that I've accumulated in my 37-year career as a trader. Now, before we begin, as always, I ask that you please take a moment to view our disclaimer. I'm going to show you some performance results using the confirmation technique and the confirmation method. But before we do, we ask that you please take a moment to view these because we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So please take a moment to view our disclaimer, and then we shall begin this week's presentation of the Trade of the Week. Okay, I'd also like to invite each and every one of you to follow us on Twitter. There's our handle right there, the abbreviation for Specialist Trading at SPC LSTTRADG. We post a lot of great free information on a daily basis, anywhere from financial wisdom to actual signals that we're in. We also we don't just cover only stock market, we cover the currency pairs as well as the E-mini forex markets, or I should say E-mini markets. So be sure and follow us at SPC LSTTRADG. Okay, so what exactly is the confirmation method? It's a technique designed to fine-tune your entry. So how do we actually apply this technique or this method? Well, let's start out by showing you a very generic chart here and show you how most people will enter into a trade. As we see here, whatever market this could be, it could either be a futures market, currency pairs, or a stock. It doesn't really matter because most people will see a scenario such as this and they'll see that the market takes off. Let's say someone in a trading room or someone on TV or even their technique tells them to enter into the market, and they don't want to miss it because it's starting to take off. So what's the first thing you do? You just jump in and buy at the market, right? This is the way most people will trade. And then what usually happens, because they don't want to miss whatever's happening, they want to be on board the stock or the market because it's starting to take off, and usually it's too late. You're just after the fact and you should have gotten in a lot more, and so you'll usually get stopped out, or you'll frighten yourself and start to have all this self-doubt and throw in the towel and just exit at the market. So the confirmation method simply states it's not a strategy and it's not an actual technique for telling you when to buy or sell. It just says whatever you're basing your entry off of, instead of buying at the market or putting a limit order lower, simply whatever day that happens to be on where your setup is, you want to buy if you trade 1 to 5 ticks above. All right, so you want to confirm that it's going to be trading higher than the day you were going to be entering. And as long as your strategy or technique is telling you you can continue to buy, or whatever you're tracking is still in a buy mode, you'll just simply track it. So all the way down, as long as your strategy is telling you it's okay to buy, you will just simply buy when you trade 1 tick above the previous bar's high. So this is where we're confirming, and as you can see here, rather than purchasing way up here the way we originally did, we're not even in the trade yet. Your strategy is just still saying that this is still a buy, but you haven't entered yet until we trade 1 tick above. In other words, it hasn't been confirmed entry. So you can either watch the trade and just enter once we trade 1 to 5 ticks. You can give yourself a little leeway, or you simply place an open order, a buy stop there. And as you can see, you were finally filled on this day here when you traded above. Now we're not concerned with closing above. We only want to trade 1 to 5 ticks above. So there's your buy confirmation. This is why we call it a confirmation method, because we're confirming that the sell-off or pullback is over and that we're off to the races. So this is a great way to fine-tune your entry, and let me show you how this was applied this week, how you could have used it on one of our strategy signals. All right, this was in the E-mini. We actually got a lot of buy signals, not only in the E-mini, but in the spiders, as well as a number of other ETFs regarding indexes, as well as stocks and the forex markets. And this was a buy signal that was generated in this particular market on the 24th of this week, which was Wednesday. All right, at the end of the day, you could have actually purchased at the end of the day if you're a more aggressive trader, or wait, as we always suggest to all of our traders, to wait for price to trade 1 to 5 ticks above the day's high. Okay, so had you used the confirmation method, you would not have entered yet, but we're looking at this as a valid buy signal, and we're looking for the market to end this little pullback and then to resume its rally upwards. But we're not going to enter until we trade 1 to 5 ticks above on the next day. And so as you see here, this is our entry place right here. So we waited for the next day, and we never actually traded there. And as you can all remember, Thursday was a really disastrous day for the markets, down over 200 points, 250 plus points. And it was a terrible day. Had we just simply entered the way most people would have, we would have had a very bad day and had a significant loss. In fact, I talked to a number of traders that day who lost a lot of money thinking that we were going to take off and the market was going to explode to the upside. Had you used the confirmation method, you would never have entered, and nothing ventured, nothing lost. So this is why when you apply these techniques, they add consistency to your trading. I know there's a lot of traders will say, well, Steve, every once in a while, I'll trade the way I do and enter the market, and I have some great trades. It's true, that will happen from time to time. But then when you get days such as we had here this past week, you give everything back. So there's no consistency. You'll have 3 or 4 great trades just entering at the market, and then when you enter, such as we did on Wednesday, had you just entered the market, you would have given everything back on that major down day. So there's no consistency with that type of trading. If you want to get consistent, use the confirmation method. All right, so let's recap. The confirmation method is just a simple technique for fine-tuning your entries. Once you get a buy signal, rather than just simply buying at the market, wait for price to trade 1 to 5 ticks above the previous bar's high. And you can continue to track that as long as your strategy is giving you a buy signal. Just reverse for going short. Once you get a short signal, rather than just sell at the market, well, we want to wait for price to trade 1 to 5 ticks below the setup bar's low and continue to track that as long as the strategy is telling you to go short. All right, for more information concerning the confirmation method or any of our techniques or strategies that we promote here at Specialist Trading, you can contact our sister site. That's Pro Trader Strategies. They market all of my individual courses and strategies. And you can email any one of their trading consultants at trading@protraderstrategies.com or simply call them directly at area code 310-598-6677. I want to thank you all so much for joining us today. In conclusion, please ask that you take one last look at our disclaimer. We present these weekly webinars to give you more insight and more ways in which to trade, and hopefully we'll get you on to that level of consistency. Thank you so much for joining us today, and we look forward to all of you becoming members of Specialist Trading. Bye-bye.